We've always just been value players. And if you give people value, you have a happy resident. Like I said, they stay, they pay, they refer their friends. And this is what it's about. It's giving people value all up and down the chain. Our managers, our investors, and most of all, our residents who actually are the source of cash flow, because without them, we have nothing.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello, and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, it's a new year. I know this is our second episode into the new year, and wanted to take this time to remind folks that we do have investor meetup, the fourth Wednesday of every month here at Suites of Madison, 412 East Madison Street, Suite 1206. We'd love to have you. We normally get about 35 to 50 people coming out and listening to a speaker, meeting each other and networking, and hopefully figuring out a way to make deals happen. So we've got folks that have driven up from Fort Lauderdale, actually, believe it or not. Fort Myers, regular listeners will come up, Sarasota, Pasco, Lakeland, and we get people driving to see us, and we really appreciate that, Stephen.
Well, also, Eric, you should mention that there is a cost. It's actually a social cost. People just have to listen when you tell the jokes, but that passes quite quickly.
I'm not the circus clown, brother. There's only one circus clown here, and that's the African one.
Yeah. But these meetups, we learn a lot. We talk to a lot of people, and it's really something that's important to attend if you can. And as Eric mentioned, we're at the beginning of a new year, and there are new things on the horizon, and that's part of what we're going to talk about in today's podcast.
Stephen and I have been negligent over the last couple of months in keeping up with folks that have left reviews for us. And we've had a lot of really positive reviews. We're just opening up and going through it now, and we're going to get through them, try to pay a little bit more attention. We definitely appreciate that. We haven't forgotten about you. It's just we've been had Lawfare podcasts, and we've been on others outside of the office doing these, going to folks that have been meeting with us, and their time's of the essence. So we've been trying to get in and get out, and just haven't had a chance to read some of the reviews that you guys have left. But I'll start with Chrissy Luna, September 10. She left a review in Google iTunes. Says, I won't start my day without it. Keeps information objective and concise. Great guests. Keep them coming. And we've got a whole bunch more from West 4141, Kai Spires, John Ellenbeck, and we're going to get to them in the coming episodes. You guys keep them coming. It does help when we're trying to solicit guests to bring them on the show. They do go look at our reviews and see what people are saying. And the fact that you guys take the time to leave a review, it's tremendously helpful for us. And in return, it's helpful for you. So we really appreciate that. Today, we're going to talk a little multifamily, a little affordable multifamily. Got a great guest, and we're probably going to have him on a couple of episodes, this episode and an episode coming up later in the year. Stephen, is there anything else we want to cover with our listeners before we roll into our guest?
I think we'll roll into our guest. We have with us today Eddie Lorin. Eddie is the founder of Strategic Realty Holdings, Impact Housing, and co-founder of Align Strategic. Over the past 30 years, Eddie has successfully purchased and transformed $3 billion worth of multifamily real estate, amounting to more than 180 thriving communities and approximately 40,000 apartment units. Eddie grew up with modest means, losing his father as an infant and his mother at the age of 17. It drove Eddie to create a life and a home for himself that was better than the one he was given. Eddie has made it his life's mission to fix the housing affordability crisis in America. Strategic Realty Holdings is the perfect marriage of impact investing and multifamily real estate, providing a triple bottom line: financial, environmental, and social returns to investors. It delivers market rate returns to investors while providing more affordable, better quality housing to those who need it most. Eddie is also making strides and is very involved in philanthropy. Eddie, welcome to the Invest Florida show.
Thanks for having me. It's a pleasure.
Hey, Eddie, we really appreciate you investing some time with us today to talk about your business. Can you give us a 30,000-foot view of how you got into real estate, how you got into multifamily, and then how you saw some of the opportunities in opportunity zones and the type of investing that you're doing now?
Sure. Out of UCLA many, many moons ago, 35 years ago. I'm an old man now and out the cucker. I got into office buildings and real estate and thought, this is cool. Everybody looks at high rises and says that's fun. And then I realized as time went on, that's really an institutional business, CapEx, TIs, very big money, not for your average scrappy guy. So I moved out of that, checked out industrial, which is a little more fun, and did some development, did some retail. And then finally, we all fish around in our 20s to find where we really belong and where it feels comfortable. And that was in housing. So I always wanted to I tried the food business, clothing business. Now I'm in shelter. So at least I knew I'd make a living. So what really motivated me was to say, there's so much dilapidated, blighted product out there that is ripe for renovation and a modest increase to get a decent return. You can build for $500 a door in the case of Miami, or you can buy for $200 a door, which makes more sense to make it affordable and have a lower basis. Obviously, the common sense says buy older product. It's not sexy, it's not gorgeous, but it certainly houses the world. And as time has gone on since the Great Recession, it's gotten very, very difficult to keep and find housing that's affordable for the workforce. So you talk about stratas in housing. So the first thing is, you've got luxury housing and student housing. That's, let's say, if you want to talk in terms of area median income, that's the way all this kind of is targeted toward. So let's say median income for round numbers is $100,000. So if you are making more than 125 or 120% of median income or 120,000 a year, you're going to be in luxury apartments. And if you're making less than 60% of area median income, you're going to be in low income housing, which is a business I'm in. But what about that lost middle, that middle class, the teachers, the firemen, the nurses? They can't afford a down payment. They can't get a loan. They need good housing too that's close to transportation or close to their jobs. So you're not spending way too much on housing. You're not supposed to spend more than 30% of your income. Say you make $60,000, 30% of that, let's see, six, that's $18,000. That's the most you should pay for rent. Challenging to do so in many, many markets. So as a result, there's that lost middle that we're trying to achieve. So everybody deserves a clean, safe, affordable place to live, to be treated with respect and dignity. And we find they stay, pay, and refer their friends. So it's not the most glamorous, sexy business, but it's a great business. We're serving a wonderful need by taking blight and making light. And that's about it. That's a pretty straightforward view of what I'm about and what we're about.
Now, you've got holdings in Tampa, do you not?
Yeah, we got 200 units in Tampa. And it was an interesting deal because half of it was put into low-income housing under the Section 42 laws, and it expired, the actual tax credits. So we got the opportunity to buy the building, and it was very well, or not well managed. It was horribly managed. So we went in there and we were able to take the market rents up to the max allowable based on the 50 and 60% of area median income. So that's half of the property. The other half of the property is market rate. So we're able to deliver a 2-bedroom, 1-bath, really nice for less than $900, we're making a very good cash flow at the same time as we're providing good market rate workforce housing. Again, there's no restriction on on half of the property because it's market rate, but the other half is based on that area median income again, 50 to 60%. And better than rent control, there's a lot of, I'm in LA and, rent control is a big topic. And in New York, and people tend to keep their rent control apartments and sublease them, and there's nothing you can do about it. Whereas here in the low income housing world, if everything's tagged to area median income, it's not tagged to the rents, it's tagged to what people can afford to pay. And that's not to say it's not challenging to meet that demand, but at least it's a more fair, even playing field.
It's interesting when we look at the landscape in Tampa and so many parts of Florida right now, all the new development coming is luxury because multifamily developers are not able to find a way to be successful to get a return by doing affordable type housing. So it's interesting that you've selected that niche and are really bucking the trend. And it is a real problem for all the people who live around here.
Imagine in LA where Eddie's based out of. Good Lord. Yeah.
Tell us some of the things you've done to be able to create this niche and how investors can get returns on going in this direction.
Look, it's called bucking the system. Perfect example is go where they ain't. Anybody can buy gorgeous, sexy product for brochure quality because that's the way most institutional bureaucrats can make sure they don't lose their job. It's kind of like I listed with CBRE. What do you want from me? It doesn't mean it's the right answer, but at least how could you fire me? So the problem is this market, it's gotten so institutional and so stratified that the real opportunities take work. I mean, people send me nice stuff all the time. I say, well, what do they need me for? I don't see the angle here. Where's the value? I'm not someone who's just going to buy and ride a market up. I have to create value through what we call value add or, whatever it is. We try to spend between $5,000 and $10,000 a door versus $25,000 a door, which makes it luxury. And we'll take and start with the sign. I want someone to drive by my sign and say, I only wish I could afford to live there. And lo and behold, they go inside and they can't afford it. And then, nicely appointed paint jobs, state-of-the-art fitness center, resort Vegas pool, all the fake Gucci bag stuff if you can't afford a real one. So, we've always just been value players. And if you give people value, you have a happy resident. Like I said, they stay, they pay, they refer their friends. And this is what it's about. It's giving people value all up and down the chain. Our managers, our investors, and most of all, our residents who actually are the source of cash flow because without them, we have nothing.
So is what you're describing, your fund really is based on what you define as impact investing? Is what you're talking about now describing the impact investing?
Yeah, it's funny. Impact investing, I've been doing it for 25 years. And all of a sudden it's a category like, oh, well, you can do well by doing good. Yeah, you schmuck. No kidding. Of course you can. Like it's something so revolutionary. And now, there's all these, I've spoken on panels and there's all kinds of different niches that people are saying, well, just give me something to measure so I can say it's impact. It's like, you tell me that housing the poor and keeping them off the streets isn't enough impact? You need a story for me to tell you? Fine, I'll hire in a consultant who takes your watch and tells you what time it is, and I'll give you a story about impact. But we've been doing it every day, all day, and that's the funny thing.
Tell us a little bit what that means when you say impact investing. Define that for us, please.
Profit with a purpose, doing well by doing good. Let's say you have a mission for a carbon footprint lowering it. So an impact investment is a market rate investment where you go and focus on cutting electricity, cutting coal-fired plant reliance, putting in solar, all these things that are related to that mission. And so it's mission-related investing that has an impact on society. So profit with a purpose, what have you. It just depends on what the definition of impact is. But, most people will tell you As long as you're doing well by doing good, that's an impact investment.
So, Eddie, one of the things you've looked for is to find other opportunities to just help accelerate what you're doing. And one of those is opportunity zones. Can you just briefly describe what opportunity zones are and how investors can benefit from the opportunity zones?
Well, we'd be further along if we could get the government open again. Okay. So here's the problem. Treasury and this last Tax Reform Act, they passed an amazing law, bipartisan, and it's already a year old. Nobody's made one investment because it's so confusing because 2 fifth graders wrote the damn legislation. But nonetheless, it's a phenomenal concept. So what it is if everybody's familiar out there with a 1031 exchange where it's like-kind property. You can trade your real estate, sell it, and then you can invest in other real estate. As long as it's like-kind, you can avoid your taxes and have a tax, defer to your gain. Great concept. Awesome. So this is on steroids, the 1031 exchange. Now, if you sold your business for $50 million or you sold your Apple stock for, let's say, $5 million, you can take that same gain and invest it into a qualified opportunity zone fund. What's an opportunity zone? In America, there are census tracts, low-income census tracts across the country. There are about 36,000 census tracts. This law allowed every governor to take 25% or about 9,000 of these census tracts and designate them as opportunity zones. So it's an incentive for people to take unrealized gains and invest in these zones. Now, these zones, some are very low income and some are kind of, median income. So what are the benefits? There are 3 benefits. One, you get to defer your taxes. So let's say we take a gain of $5 million in 2019, and we are going to be able to avoid paying taxes on that gain. If we put it in an opportunity zone fund in these census tracts, you get basically a loan from the government for no interest. So you're not paying taxes on that gain until 2026. If you have it for 7 years, which would be 19 to 26, so there's 7 years, you get a 15% step up in basis. So you get a discount on the taxes that are due in 2026. And the real doozy is if you hold that investment for 10 years, meaning 2029, if we invest it today, and that $5 million becomes worth $10 million, that extra $5 million of gain is tax free. Fantastic. Phenomenal.
That is 1031 on steroids.
Right. But, it was written by 5th graders. It's very loosey-goosey. There's a lot of questions. And by the way, this is not just for real estate. You can open a chicken joint. You can open a manufacturing facility. It's just meant to bring capital into these zones. And if anybody is questioning what those zones are, you can find it on eig.org, or you just Google opportunity zone map, policy map, and you can look it up. Put your address in there, and that's what it is. But it's very complicated. So let's say you and I own a building, and that building is producing good revenue. But it's in an opportunity zone, and it's old. It's 40 years old. So let's say someone's willing to buy it for $5 million. They need to say, okay, I'll pay you $5 million, and hopefully we can strip out 20, 30% of land value, right? So that leaves another 3, 4 million of building value. And let's say it's 50 units. Well, that means the next person who's coming in, there's 100% of your basis rule. So this is basically set up for new development, not for rehab. So a lot of the buildings people think that are worth something, I'm in an opportunity zone. Well, no, not unless you have another $3 or $4 million worth of renovations that can be applied to that property. So chances are 50 units, you'd knock it down and it's not going to work. So a lot of existing properties are just kind of be disqualified. But let's assume you have a piece of dirt and land, and you have decided to invest into that opportunity zone fund. We have 6 months from you take your gain. So let's say you took your gain January 1st. You have until July 1st to put it into an opportunity zone fund, and that fund invests into opportunity zone property or businesses. And business is a property. So you're getting the picture. I just gave you a little 1 minute of how complicated this thing is. And imagine that we're waiting for more guidance, because here's another question. Do you have to hold it for 10 years or can you sell it in 3 years? So here's another example. I'm on a coalition with EIG.org in DC. Venture capitalist comes into our meeting and says, look, I invest in businesses. I'll buy 10 businesses. One's a home run, two's mediocre, and the rest I lose my ass. So what you're telling me is I'm going to come in to an underprivileged area, a lower census tract, right? A low income area. And if I happen to hit a home run on one of the 10 businesses I open in this distressed area, you're telling me I have to hold it for 10 years? I will miss my window. I'm out. Done. So Treasury said, that is a problem. That's not what we intended. So Treasury's coming back, and we've been all these coalitions to write the new laws to get the clarification. So, oh my goodness, we're excited. January 10th, we're getting our clarifications. Oh, the government's shut down. And it may be shut down until the end of February is what we're hearing. And nobody seems to give a crap. So it's just so frustrating. But to give you an example of why nothing's been happening, there was so much confusion on the way the law was written. We're trying to clarify it. We finally get to the point where we can clarify, and all the wheels have stopped. So I don't know. I kind of got on a rant there, but I think, are you following me?
Yeah, absolutely.
Yeah.
So would your intent to be to use your fund to create investments that investors can participate in the opportunity zones?
Yeah, as they say in South Africa, absolutely. Yes, we are definitely forming a fund. But a lot of that guidance is, we can't finalize the fund. Nixon Peabody's our lawyers, and they're a very large firm. And, we can't even finalize until we get this government open and get some of the wheels moving again. And, if they're going to be closed until the end of February, then we're talking March. I mean, it's really a cluster.
Now, in the meantime, you're not sitting on your hands. You're out looking for properties, right? You're still out trying to do acquisitions.
But I can't commit to you, if you're a developer, that we're going to fund your deal if we don't know that we can yet. It's just, the markets don't like uncertainty. That's why you see the stock market going nuts right now. And that's why you see a lot of people on hold. Mm-hmm. It's not a good thing.
So in the meantime, it sounds like you can't really, besides even making a commitment on an acquisition, you're pretty much handcuffed right now.
Yeah, we're finalizing the fund. We're moving down the road. I still do my value add apartments having nothing to do with opportunity zones, but I still see this as one of the most incredible, no pun intended, opportunities of our lifetime. Just like the tax reform of 86 brought about the low-income housing tax credit, which was great for us. This is the next level for workforce housing, the lost middle. So it's a great thing. It's just, I'm just kind of frustrated. I just heard from someone today that they think the government's going to be closed until the end of February. Someone in DC I know, and they just don't seem to care. And it's just like, really? How does anybody win here?
It seems like a good fit for affordable housing or workforce housing, because it's one mechanism for investors to get a return that they just wouldn't get. And that's the reason they're not building this type of housing.
Well, let's talk about that. The two different investors, the guy who sold his business for $50 million and want to defer his taxes and build workforce housing, is not the same investor. The banks and insurance companies that invest to buy low-income housing tax credits to take a loss and get brownie points or CRA credit for building low-income housing. But it's the same product you're building. It's just that the low-income housing tax credit lowers the cost of the equity because it's almost disappearing equity. So you're building for $500 a door, but you end up at $200 a door at the end of the 15-year period, but you're restricting the rents. Nobody can restrict rents without subsidies from the government or tax credits or some form of soft money. So it's a very complicated business, and it still costs the same amount of money to build product regardless of who's the occupant.
Of course.
So that's why I've always been a crusader for buy the old stuff and deem it affordable and keep it there. But it's not sexy. It's older product. It's easier because the system's set up for building new, but it's so much more expensive. Mm-hmm. And you could theoretically, if you're buying at 40% of replacement cost, you could have that much more, 2.5 times the amount of stock that's affordable if we bought up all the affordable housing that's existing. But, I'm just like singing to the choir here, but I do my part.
Eddie, we're going to want to loop back around with you in 6 months. Hopefully we're still not shut on the government and we're moving forward, and we can try to get an update with, from you on what's happening with your fund and how it's working out. But in the meantime, before we let you go today, I'd kind of like to hear what's going on in the market, how you feel about the multifamily market, where we are in the cycle, this sort of thing.
Well, we're definitely on the luxury end is very concerning. There's too much product that people can't afford it anymore. It's just, there's such a lack of housing though. So you have a stratified business where, people can't afford and they're going to end up in trouble on the high end. And we have to be able to provide enough on the low end so that everybody can have that decent place to live. So you have really a dichotomy in this marketplace, and it's going to be complicated. It's we're just buying, I just closing tomorrow on 200 units in DC because, it's workforce housing. It's in the low hundreds per door. And, it's great product right on the border of DC with Amazon coming and bringing 25,000 jobs. Mm-hmm. That's amazing. Where are they going to all go when the 2% vacancy is as it is? So all boats will rise, and, we're able to provide decent housing that's affordable. So I love that market. I love LA. Vegas is a shortage of affordable workforce housing, but you go to Dallas, they have an affordable housing crisis, but they have so much on the high end they can't fill. So you really you can't broad brush it. You got to really dive into, there's never a good time to do a bad deal or a bad time to do a good deal.
Sure.
And, good deals are made, not found. There's always something unique that we see that someone else hasn't seen because we have so much experience at this.
Yeah, peeling back the onion, sometimes you can find real gems. Besides your Tampa property, are you looking at anything in Florida, or are you paying much attention to the Florida market outside of your Tampa investment?
Yeah, there's an opportunity zone right off the 4 in Orlando that we're very keen on. It's a kind of area that's gentrifying. It's near the stadium, and we're very excited about that, looking at funding some workforce housing there. So, yeah, I love the Florida market. It's just the same problem. You go into Miami and that high-end stuff, it's not sustainable. $4,000, $5,000, $6,000 rents are really going to be tough for people to continue to pay unless they double and triple up. But, when you're buying 1,400 rents, that's affordable to everyone. Mm-hmm. So that's what I like to play in. And that's where I don't think you're going to get hurt.
Yeah, it makes sense. I mean, we look at our window and we see all these cranes and wonder how people are going to pay the rents for that. But Eddie, we would love to circle back with you when as Eric said, when this shutdown is over and as you're getting started with the fund, because it just seems like such a logical kind of way for everybody to increase their net worth and do something good at the same time. Eddie, if people want to reach you to find out more about what you're doing, how can they reach you?
My website is strategicrh for realtyholdings.com. So it's strategicrh.com, and you can contact me through there or through alliancestrategic.com, we're launching our site for the opportunity zones very shortly.
And if folks want to partner with you or invest with you, or they want to bring you deals or work on deals with you, I know you look in affordable housing, but maybe you can give people some bogeys so they don't waste your time in terms of bringing you stuff that is of interest to you.
I'm looking for stuff that nobody wants to touch in lower to moderate income areas. There's an opportunity to get a return on our capital investment for giving that injection of capital. We take blight and make light, and we love major MSAs where there's a shortage of affordable and workforce housing. So, that's it. And if you happen to have a development that's in an opportunity zone, we'd love to fund you.
Awesome. Stephen?
All right, Eddie, well, thanks very much. We look forward to talking to you soon. We're going into a really interesting period now with all this, so we will circle back. And thank you for being with us today.
My pleasure.
Eddie, appreciate it, sir. Hey, that was great. had Eddie talking about opportunity zones. I've been trying to learn more about it myself. I actually feel a little better that he was explaining that things are still sort of loosey-goosey and nebulous. And I know it was confusing for me reading some of these and trying to figure out how we might be able to help folks with this. So it was great to have Eddie on and talk a little bit more and provide a little bit of clarity. At least I feel a little bit better about what I've been looking at. Steve, what were your thoughts?
Yeah, I also had some confusion about opportunity zones. It sounded great, and I wasn't sure what was going on. So just to listen to Eddie explain it a little, it is something we all have to pay attention to. And if you're looking at real estate for investment, you have to pay even more attention to it.
Yeah, consider this part one of two parts that we're going to try to loop back around with Eddie after things are engaged. And obviously, they're still trying to work out a lot of things in D.C. And, we're recording this the first part of the year. So we're right in the middle of the government shutdown. Affordable housing is an issue. Workforce housing is an issue. And it's interesting, we see what is happening throughout the major cities in Florida and Miami, in Orlando and Tampa, Jacksonville, that mostly it's Super A. It's not even A. It's Super A that's coming out of the ground. And we're wondering where the postal workers and the construction workers and the nurses and the teachers are going to live. The pricing continues to rise, and it creates an issue. So Eddie has some solutions. We want to loop back around with him and see how he's helping to solve the problem. Stephen, anything else before we let our listeners go?
We have many more interesting and exciting topics to listen to on real estate investment. So the place to go is go to the Invest Florida show. You can get it on your mobile app on either Google or iTunes, or to the website www.investfloridashow.com and go to the archives.
Guys, we appreciate you taking the time to listen to us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Steven Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.